Hello traders, welcome to KineFX Academy YouTube channel. My name is Akinola Kin. I am the lead instructor. In this video guys, we are going to do something together. We want to build spike indicators together, like something to tell us that spike is coming before the spike occurred in the market, so that we can take the advantages of spike to make money in the boom and crash market. So now what we are going to do is just to be following me as I'm going. Understand? Don't make a mistake of skipping any seconds of this video. If you do that, you are going to miss out something that may require you losing your money to pay for it. So I will advise you to stick to the end of the video and don't miss a seconds on this video. So guys, I will make this video quick so it won't take much of our time. So as we all know, just click on the indicator symbol, indicator logo, I think so. Just click on it. The first indicator we are going to add is our relative strength index. So that's what we actually need to determine the weakness and strength of the trend before the spike occur. Just click on it, leave everything at the default setting like this. Change this color to the background of your chart. If you are using dark background, you should change to black. If you are using white, you should leave it as white. Then click on done. After that, you should have something like this on your chart. You can put your chart at the last zoom level. You can see how my own chart is. So I will actually tell you the reason why it is in the last zoom level. Actually, you can use any level, but I prefer using the last zoom level for this particular strategy or indicator. So then go back to the indicator window again. Just click on the F sign again, as for the beginners. So click on this F plus. So now we'll be looking for a moving average. So you can see the moving average here. Just click on it. Change this 200 to 5. We only need 5 at the indicator window. 5. You can leave the color at blue, or you can select any color of your choice. Leave all the settings, shift 0, method exponential, apply to close, style for pixel, then click on done. After that, so you should have something like this. So now let's go back to the indicator window again. Remain one moving average. Click on the F plus in front of the indicator window. Click on the moving average again. Then turn this 5 to 10. Then click on done. Let's change the color. You can choose any color of your choice, but let me use black. Then click on done. So you can see that. So it looks like normal strategy we are familiar with, that if anything cross here, you should say that is if you are selling. But now we are cashing spike. You know, relative strength index tell us the weakness of the strength. When the we know that when the market get to the region, that means the market has been oversold, we should buy. And when the market get to this region, we know that the market is overbought, we should sell. So now, you know, when cashing spike on boom market, you know, we are going to buy. So our area of interest is the market when the market is oversold, which is here. So how do we know the spike is going to happen? When these two moving averages has come to an agreement here. So there's something must note before the spike must happen. These two moving average must align. They must align together and turn to one. You can see if you shift your chart to the extremely left end, so the two indicator must align, and you can see it align here. So does this mean that spike is going to happen? For me, I will say probably, under maybe. So how can we sure that the spike will actually happen? Then go back to the indicators window. Then click on this relative strength index. This that I said you should turn to the background of your chart. I think you should leave it at red. Leave it at red. So all you just click to set to default to bring out this, then click on done. So we have this. You can see that the red we just added now is the one lying down flat here. You can see it's the one lying down flat here. So now all these three indicators has come to an agreement here. You can see, but this red has not entered the oversold region. Sorry. This red has not entered the oversold region here, but this two has been in the oversold region, which you can see that the spike is not that sure. So now what we are looking for is that when these two moving average, let me see, all these three moving averages, the stochastic, the signal is stochastic, the two moving average exponential we added on our own, when they come to an agreement in any of this region, when you are trading crash, you are going to sell. But let me just focus on this boom. When they come to an agreement in this oversold region, so there must be spike. When three of it enter that region, there must be spike. So is it when they just enter that spike will occur? No, there's something. It has level, it has gauge, and it has let me say indicator on its own to measure the level of the spike when the spike is going to happen. So it has meter. Let me just call it meter so that it will be clear. So how do we read the meter? How do we read the numbers? So you come to here in front of this RSI 14. You can see there's a number reducing. You can see 18.79. You can see 18.6. You can see 18.5 now. You can see 18.4. So now how do we know where to enter the trade? So the meter, when the meter keep reducing, it's telling us that this trend that got to this oversold region is getting weak, that spike will happen anytime from now. So our own area of interest is when the spike gets to level 1 or level 0 point. I just give you the measurement you will be looking at. So when this meter reading get to 0 point, if your account is $30 below, you will be waiting for this meter get to 0 point. It actually get there. In a day you may see more than 5 to 10 getting to 0 point. If your account is $100 below, you may be trading at 3.2 points. You are safe, because and there is another thing out. That's why I told you that not to mix any seconds of this video and not to try to forward any minute of this video, because there's something I'm going to show you about this reading too. So because you may say that sometimes in a day the reading don't get to 0, maybe you don't see any 0 before the spike occur, and you may see that if you have $100 account, you may see that if you enter the trade from 2, it will actually enter a 0.01 before the spike occur. Let me tell you what happened in that scenario. I will explain. You can see that this thing is 16.4 now, is reducing. So all the three moving average has been in this oversold region. Is telling you that this trend is getting weak, that buyer may take offer, that the trend may change anytime soon, which the spike may change anytime soon. That is what this meter reading is telling you. So now, as I explained, how do we know when this will get to 0 and when it will not get to 0, so that we can take advantage of that again? Now let's click on this indicator sign again. Click on main chart, the F plus in front of main chart, then click on moving average, then change this to 200. then change this color to any color of your choice. I prefer using blue. Then click on done. So now you will go to 15 or 30 minutes time frame. Let's use 30 minutes time frame. You know what this means? I've explained this in many of my videos. So anytime you see this candle above this line this moving average we just added, anytime you see candle above it, that means the market is buying. There's a lot of spike in the market. When you see that in higher time frame, if you are going to 1 minute time frame to trade, you should have it in back of your mind that what you are doing, if you want to follow the trend, you have to buy. Only if you want to counter trade, that is when you are going to sell. And if you see candle below this moving average, so you will have it in back of your mind that the market is selling. Only if you want to counter trade, you will buy. Now in this scenario we are now, the market is selling because this candle is below the moving average. So in our M1, in that situation, when you see that the general trend is buying, that means this indicator, you have to wait for it to get to 1 point or 0 point because the market is selling. The general trend for the market is selling. If you enter for buy at level 3 or 2, you may enter much lost before the spike happen. And if the spike happen, it may not be able to cover the loss. You understand? Because the general trend for the market is selling. So but if the trend, if you check your 30 minutes time frame and you see that the candle is above this moving average, you can catch your spike when the you can go to 1 minute time frame and catch your spike at level even 5. Spike will surely happen because it has shows you that the trend is buying. The spike is the market is spike market, but now the market is sell market. So waiting for spike, you have to patiently wait till this gets to 1 or 0 before the spike occur, because the general trend told you that the market is selling. So let's check crash. So you can see what we explain is other way round. You are selling, you are buying for crash, selling for crash, and you are buying for boom. So you can see when everything comes to an agreement in this region, so you'll be waiting for this to get to, now that one is 0 points. Now this one is 99 points before you enter for sell. If you are catching spike, if you know that, if you go to the 30 minutes time frame and you check that the candle, you can see the candles are above this moving average, which means the market is buying. Crash is buying. So for you to catch spike in the 1 minute time frame, you have to wait for this to enter 99 points. You can see this one is counting up, but that one is reducing, so it is reading the strength of buying. You understand? This is buying. You understand? So crash is buying, so it's telling you the strength of this. So when it gets to 99 points, which is 100 is the maximum level and 0 is the minimum level, when the buying gets to the maximum level, it will surely spike down. You understand? So let's see some back testing and see the level of spike. So you can see here the spike happen when this, let's bring out the cross here. You can see at 99.6, that is where the spike occur. 99.6. So you wait for market to enter 99 once you confirm the general trend that the market is buying. But if the candle on the 30 minutes time frame is below the moving average like this, that means you can catch the spike at 98 or 97. Spike could happen anytime from that. But general advice, if your account is below $30, please always wait till it's 0 point or 99 points. Understand? 0 point when trading boom, when you want to catch spike on boom, and 99 points when you want to catch spike on crash. So guys, go and try to demonstrate this strategy to build your confidence in this strategy. So I have done my own part. It's left to you to make use of the strategy and to make sure the strategy works for you. So guys, I wish you happy trading and always trade responsible. If you have not subscribed to this YouTube channel and you think I deserve that from you, don't hesitate to do that. Just click on the subscribe button, drop your comment under the comment section, and if you want to contact me, my contact address is under the description of this video. So guys, have a nice day.